jump into Forex right now because there's a lot of news coming out this week, Chris. As we mentioned earlier on, we got the jobs coming out at the end of the week for both the US and for Canada. We've got rate decision coming out on this evening for the Aussies, and the New Zealand out tomorrow. And there's a bit of a controversy of whether or not we are going to see a rate hike with the New Zealand tomorrow. And that depends on, of course, what the Aussies do this evening. What is your take on that, Chris?
Yeah, so I mean, there was essentially a balk last time. I was looking at the Forex Factory calendar this morning, and the RBA is expected to keep things the same. The RBA has been the slightly more like neutral to dovish central bank of that area, looking at essentially keeping rates unchanged for the next probably year or two, maybe 2023. But the RBNZ was already talking about raising rates, and then COVID kind of squashed that a little bit ago with the Delta variant, where they were supposed to raise rates back in August, where they were expected to go to 0.50, and they came in at 0.25. So here we are again. Now it's October. Are we going to see a rate hike? What's interesting, though, is, this is what I was asking you guys before we started the live session, is the RBNZ rate hike actually priced in? And Gary, you said no, but going into that August rate decision, a lot of it was priced in. I mean, we were starting to see like the month leading up, like early August into the rate decision in August, the New Zealand dollar was one of the strongest currency pairs of the month. So, I mean, in a way, I think like maybe it's willing to revisit some highs and lows, but I don't necessarily think that the RBNZ, is going to shock the market with anything that is not expected. So I think they'll still raise rates. That would be, a big deal, obviously, in this environment where nobody's raising rates. But at the same time, if they do raise rates, will that also force the hand of the RBA? I know, Gary, you've said before that you think the RBA leads and the RBNZ follows. But in this instance, I think the RBNZ's taken their plan, and they're going to raise rates to 0.5. And then we'll see if the RBA flinches and maybe jumps it up to like 0.25 and starts to kind of chase up a little bit. So I think, again, if you want to see how the fireworks pan out, then watch Aussie dollar, watch New Zealand dollar, watch Aussie New Zealand. That'll be good crosses to watch in Forex this week to see, which currency pair gets the upper hand.
Yeah, and I somewhat agree with you. But Tyson, you were speaking about the Aussie CAD position that you're in at the moment right now. How does that change your how does that influence your decision based on the fact that we've got news coming out today this evening for the Aussies and they're keeping the rates unchanged?
Yeah, it's actually it doesn't really change the stance that I have. I'm bullish on the Aussie CAD. It actually makes me want to look at the New Zealand CAD more, because I'm looking at, so I'm going to lean on the technicals. I agree with everything that you guys said fundamentally. I do think that New Zealand's going to lead this time. I think that they are going to raise, and there's going to be maybe a little bit of a follow-up with Aussie. And but with that being said, technically speaking, based upon the money flow this month, the Aussie New Zealand it's not in a confirmed money flow, but it is it's not in a forecasted reversal, which is kind of a consecutive money flow pattern, but it is in a money flow pattern bearish coming into this month, which means I'm looking for a sell-off in the Aussie versus the New Zealand. I think we're sitting at levels of potential supply. Now, with that being said, we were talking right before this session, I see a push down towards 101 to 100, and I think that could be a multi-year buy level. Yep. I think that could be an absolute phenomenon. So I don't think this is a move that's going to last forever, but I think we're going to see a flush down towards 101, 100. Those are going to be awesome buy levels, but I am looking for weakness throughout this month. So think about this. So I am long the Aussie CAD. However, I see the Aussie New Zealand falling. That leads me to the New Zealand CAD, which I actually haven't pulled up in a little while. So I'm interested in actually looking at strength in the New Zealand CAD. And what's interesting as I look at this and I see the New Zealand CAD sitting right around this, at this 87 to 87.50 level, I think that's probably a little bit of that's a really nice level that I think we could start to rally from, depending on what happens this week. So I'm gonna actually look at the New Zealand CAD throughout the week and try to pick my shots there, because I like the Aussie CAD. But if I like the Aussie CAD, then I better like the New Zealand CAD, if all of that makes sense.
Yeah, I think I like that play, because if you look at the chart right here in New Zealand CAD, I've got multiple positions in on that, but I'm just saying this, that if we're at the support level, forget about the support level. Let's talk about the move that we've had over the last few weeks, right? Or at least, the last couple of weeks. it's been really strong bearish. So there is correction due, right? We're like really oversold right now, looking for some sort of correction due. So if anything, Tyson, I think we should at least get at the, a 3.8 pullback, a 3.82 pullback on this last wave move that we had right here. And that could bring us all the way up to around about 88.46. Well, at least go test that for a correction move. So I like that play. Now, your New Zealand CAD position that you're looking at, Tyson, is that going to be more of a short-term rally, or are you looking for it to rally a lot more higher?
No, based upon what I'm seeing and based upon what the monthly money flow is telling me, I think it could be a decent short-term play. I mean, I wouldn't be shocked if this week we don't get a push back up towards 88.50. But I see some decent legs in this. I see, over the course of the next few weeks to next month or so, I think we could push back up towards that 92 level. I think we're going to struggle at 92, but I think a push back up towards that 92 level is in the cards.
Yeah.
Well, fellas, the CAD has, I mean, we've got to acknowledge what oil's been doing too. It's like we haven't really seen any substantial turn in oil at all. We're sitting at almost $78 right now. Look, we're at equal highs. I'm looking at the higher time frame. The daily chart's nearly at overbought conditions with the relative strength. We're sitting with slight divergence. To go to the weekly chart, are we sitting? I mean, we're right here with hidden bearish divergence on the weekly chart for oil. I mean, I know that we could drift up a little bit higher. We're looking at oil 1, 2, 3, 4, 5, 6, 7 weeks in a row bullish. So, I mean, how much higher can oil really stretch just based on this candlestick count? I mean, $80 has to be a pretty firm level of resistance, in my opinion. And so, again, we're looking at, just a great flush, like Euro CAD dropped straight down, Pound CAD dropped straight down, Aussie CAD is still at the lows, New Zealand CAD dropped straight down, CAD Swiss went up. I mean, I see a good play for the CAD basket to get a little bit softer. New Zealand CAD, I love that trade. And it's like if oil, starts to top out now or starts to give us some confirmation at $80 highs and starts to flush back down, then I think the CAD is going to be a great trade for us to be, short on the CAD basket.
Yeah. So what do you guys think of that? I think what you just said is really key, Chris. Maybe don't even trip over the details of it. Look at the whole entire weakness on the CAD basket and just kind of, do the shotgun approach and, go long dollar CAD, long pound CAD, long Euro CAD. And obviously some of those might pay off more than others, but you're kind of spreading your risk also.
Mm-hmm. I like that a lot, actually.
Yeah.
I wanted to bring you into that one there, Chris, because in my trading room, we did speak about U.S. oil, and we did say U.S. oil is getting a little bit of a spike on over that resistance. Mm-hmm. But if I get a little spike and a pullback, and then price closes back below that resistance, or I get a nice little bearish engulfing, any sort of bearish candlestick formation forming right there below, it's a good sell to start looking at all the other crosses against the Canadian dollar and trade that off, because that's probably going to be our best bet for this next couple of months or couple of weeks. Sorry, is watching
US oil.
So
you're looking for that potential so you're looking for potential continuation push higher, maybe.
No.
Oh, okay.
I'm
sorry.
He's looking short too.
Got it.
Yeah, I'm looking for U.S. oil to turn around and head back down south, because
okay.
I've been targeting 61.57 if we hold above that, and so I don't think we're going to break above that.
The reason I ask that is this: doesn't it seem like everybody thinks oil's getting toppy? That's one of my concerns.
Yeah.
When everybody's thinking something's going to happen, oftentimes the opposite happens.
But today seems to be one of those days, Tyson. Today seems to be one of those days where it's like, I've been thinking toppy for a while, and you got resistance at 77, and then today it's up to 78. But it's like, if you look at today's candle, it's a big bullish candle on the day. I just 7 weeks in a row, though, it's like, come on, dude. I mean, I don't know how much further we can stretch after having 7 bullish candles in a row on the weekly chart. I just think from that standpoint, the technicals look good. Yeah.
Psychologically, it makes sense too. And a lot of people need to, remember this is psychologically, we're going to get to a point of mercy for whoever's trying to sell it. Right. And they're like, okay, I'm done. Or they're going to double up. And then we're also going to get to a point, and this is even more powerful. We're going to get to a point where whoever wanted to buy has bought. They've got a bunch of profits already in. And so we still have a lot of buyers, but do we have a lot of buyers at current price, or do we have a lot of buyers that will say, hey, I want to buy lower? And I believe we're getting to the point where we have a ton of buyers. This is real buying, but they want to buy it at a lower price, which means we're likely to come down first.
Agree.
Yeah.
And Gary, you mentioned like $62. I mean, I'm thinking, it's okay. Let's throw this out there hypothetically. So I think that oil, if we start topping here between $78 and $80, we start breaking back down. I think oil can come back down and revisit $63, $62. Now, the question I have for you, gentlemen, is: are we going to hit $61, $62 and have that be another low to head right back up to $80 and have like this kind of supply and demand range on oil? Or do you think that if we're making new highs like we are now, let's say we peak at $80, $81 and we drop back down, is that a potential head and shoulders or a crown for a top in oil? Because if you go back to
I think it has a lot to do with 2024, what the U.S. does with our oil exploration. There's so much fundamentally. Yeah. So what you're talking about, I think, is long term. We're either going to go to 150 if we stay in the current regime, current, like inflationary environment, stuff like that. I think we're going to 150 or 200. It's going way, way higher. If things change and we open up pipelines again, and we, and depending on the regime and stuff like that in 2021, then I think we're going back down to 20, 25. So, but I like what you're thinking, because it's setting up either. I think what you're saying is we're setting up. I think in this area, we're going to base around the 60 to 80 level for a while. And we're either setting up for a double to the upside or a cut in half to the downside. But we're not going to stay here I think we're going to stay here. I think we're going to base in this area for the next probably 5, 6, 7 months until we get a little bit of a clearer picture on what 2024 may look like, what the U.S. policy is going to look like, what infrastructure, how much is actually going to roads and stuff like that. Are these EVs, listen, this EV movement is huge, but is it really viable? You see what I'm saying? Like, there's still questions of viability and stuff like that. So I think all of this is going to play out. I think it's going to be great. I am long-term a perma bear on oil long-term. But that doesn't mean we can't push up to 150 again someday. So I don't know. It's interesting. So to answer your question, I don't even know, Chris. I see it long-term bearish, but it's such a clouded chart.
Or
let's go to what we can say we know, right? And that is technicals, because you're right. The fundamentals, what the US does, what they don't do, it's all confusing. It's all like a blur right now. But what we can say is we can always follow the technicals, and what the technicals tell us is what price should be doing based on the patterns that are forming, and we can only follow that. And if the market breaks out of these patterns, then we look at the alternative. So that's always the backup, alternative. But if we go to the charts right here, Chris, and to answer your question here, if you look at the chart right here, it gets very confusing. But when you put some details in here that makes a little bit more sense on what's going on, this is what I'm seeing. I'm seeing price moving into a wave 1, price moving to wave 2, price move to wave 3, price move to wave 4, price move to wave 5. So now we're topping up, we're creating these double tops here, possibly. If price breaks through that, we're going to be chasing after what happens when we complete a fifth wave. Price chases after the fourth wave low. That's it there, 57. Right. That's why I'm saying 57 is going to come into play, because price is going to start working its way back down towards 57. Now, when it gets there, then go into what Tyson was saying. Yeah, then we're on an upside rally. Then we can see price going up much higher up, and we could probably see price going up. Well, I'll have to go ahead and put in total fibs. Yeah, I don't know about 150, but if you go ahead and put in fibs from the lowest point right here, and just go ahead and connect the highest point there. Let's just do this. We're looking at a 1 point. Let me see if I can get it right here. We're looking at a 1.618 there at 125. Now that's not where it's going to stop, because that's going to be the price third wave. So this is going to be wave 1. This is going to be wave 2 right here. Then we're going to look for wave 3 up here at 125. Then we have another correction move, and then price is going to go up to the next level, which 150, which Tyson mentioned right here, is absolutely in the cards. But I think it's going to take some time for us to get there. I think once we get down to $57, I think then we can start thinking about 125, 150 eventually at that point. But I think if we take it in stages and we think 57 right now, think bearish towards 57. Once you get to 57, think bullish to 125. Once we're at 125, look for correction move. After the correction move, look for another rally to 150 plus. So that's what I look at, because if you take all of the information, take all the news, take all of what's going on right here, and try and connect it with the technicals, it gets really confusing. But if you just really focus on what the technicals are telling us, and right now we can only follow the technicals. If we trade back below, if we trade below this resistance here on the chart, which is at let's take it 76. If we trade below 76, we're heading down to 57. But there is some upside potential to 79. I think, Chris, you mentioned 79 there for a minute, 79.80. So there is some upside potential to 79.80 before we actually see the turn, because if you look at the internal structure, we've got wave 1, 2, 3, and 4, and now 5 is here at the 127, which is at 79 and change, call it 80. So yeah, that definitely lines up with you guys, what you guys are looking at right here from a short-term and a long-term perspective. Yeah.
Well, I think you're spot on. I think the one big takeaway on what you just said is that's why I love what we do is we there's a lot of ideas, a lot of opinions, and a lot of the stuff we say is based upon our experience and education and what we know and all this kind of stuff. But oil's a perfect example of a manipulated market, and the fundamentals today can change like in an instant. You know, they're talking about cutting production, OPEC, I mean, all this kind of stuff. So like you're talking about a massively manipulated market. So fundamentally speaking, can be one thing today and another thing tomorrow. Whereas technicals, listen, you're looking at a lot long-term enough chart on a daily, weekly, monthly, it's not going to change. It changes over prolonged periods of time, but what is happening right now is real. And so we always lean back on price. So I love that.
Yeah.
Gary.
Hey, Chris and Tyson, I want to bring something that we've never spoken about. We have maybe touched on it a little bit, but what about gold and silver? I think gold and silver is at a good, solid buy position right now. Solid support on both gold and silver, and I think there's opportunity on both of them. What do you guys think about gold and silver?
Yeah,
yep, silver for me all day.
Yep. We've been talking about it in equities on demands. We've been establishing some positions. We've been actually very, very conservative on it. We actually structured a position, Chris, where I think we were getting long below $19 or something like that on SLV, which is the exchange traded fund for silver. We structured a position. Get this. This is going to sound kind of crazy, but this is what we teach in equities on demand. We try to make money up, down, and sideways. In fact, we don't just try. That's exactly what we do. Every position we put on, we want to make it. It's true. Like we don't ever take a position that's not going to have some type of profit, regardless of what happens. Now we can lose in it. If the market goes down, way further than we thought, then we absolutely can take on a loss. But what we did is we structured a trade when silver was at SLV was at like $21 or $22. We structured a trade that we guarantee ourselves a very small profit, but we guarantee ourselves a profit if prices goes nowhere. If price rallies to the moon, we guarantee ourselves a small profit. Even if price fell down to $19, we still made money. So price could fall almost 10, 15% or whatever it might be, and we still make money. And so it was a super conservative way, but that's my long-winded way of saying we really like silver. And actually, Chris, I think we might be being a little too conservative on silver, to be honest with you.
Yeah, I just did a credit spread this morning. I know that we talked about it in class, and I was like, we're just going to sit tight. But, I've got the income play out to November. I threw a credit spread in. I did the 21 by 2050. I'm in it. I'm going to test the waters this week. I wouldn't mind getting assigned again. But I went further out, Tyson. I did a credit spread for, I did it today, but I put the expiration out to 10/29, so the end of the month. So if we do have that flush down into, I'm looking at SLV. If we flush down to set, $19, $18, I still have that long put that I can cash in. And that would be kind of my insurance, if you will. So that way I can lower the cost even more. But, I really like this, $20 area. As if we stay firm at $20, I could see a nice little jump back to $25, $26. And I've been talking about this. I don't know if it's going to take 3 months or 6 months or a year. But if I'm building a base at 20 and eventually it comes back up to, $26, $27, that's a great return on silver. That's a nice little play. And Tyson, you keep saying it, like it's a great place to hide out. If we're not sure what the dollar's going to do, if we're not sure what oil's going to do, we're not sure. If I had to pick between gold and silver, as Gary was asking, silver for me all day. I would take silver technically over gold all day.
Yep. So question for you. If you want to pull up a chart of SLV, and I've got a question for both of you guys. Would you own SLV silver, the silver ETF, at $17.40?
Absolutely. Absolutely.
Sounds impossible, doesn't it? But here's what we do. Go out to December 31st, sell the $18 put for 22 cents, and do the 18 by 18.50 bear call spread for 44 cents, 45 cents. And if price is above that, you only make 15 cents. But here's the deal: you still make 1% on the trade. You're still making like you're like, oh well, you don't make much money. Well, it's 1% on almost a risk less trade. Or you own SLV, you own silver. What are we trading at right now? Almost $21. You own silver at $17.40. You own it 17% lower than current price. That is phenomenal. That's the kind of stuff people need to be doing. Again, that's a super conservative way to do it, but that's a way of like, hey, how do I beat the bank, right? How do I beat what the bank's going to pay me? But how do I also, at the same time by beating what the bank's going to pay me, how do I also own something high quality, way lower than current price? That's how I would do it.
Yep, yeah. I like that a lot.
Well, if you look at the technicals on both silver and gold, because to answer your question there, Chris, on your choices on the two, technically, well, silver is sitting in a range. The next upside move is going to be at 29. So you're looking at 26. That's halfway through the range. That should be an absolute easy target. But it is sitting in a nice little range here on the daily. So 29 is the upside target for the range. But we should see further upside potential to around about. Well, I believe this is the first swing since the low. Yep, it is. So if we're looking at silver for a break of 29, we're chasing off to 41.25. That's in silver. If we go ahead and take a look at gold from a technical perspective, let's take a look at gold. Gold's also coming out of this big bullish rally, and we spoke about price going down to around about 16.17, but of course that turned around a little early. We turned around at 16.77, so never hit the 1600 exact. And we saw this wave 1, 2, 3. This is 4. So we're looking for gold to chase after 1981. So I think from that perspective, I think you're right. I think silver is definitely a bigger upside turn now. So let's just talk about silver and gold, right? Gold performs well before recession, heading into recession. Silver performs outstanding during recession. Are you saying that we could possibly be heading into recession?
Oh, I think we're for sure heading to. I think it's almost a.
It's a contraction. Yeah,
and
it's
the
a
reason
contraction.
why is because we're coming off such a high. I think it's going to be the greatest recession ever, and we're going to have a GDP at like 4%. You got to remember, a definition of a recession is
2 quarters.
a decline in 2 quarters in a row in the gross domestic product. There's no way we're going to continue to grow at 6-7%. So I think we're going to go through a technical recession with the economy still being maybe awesome. So it's going to be really weird, and it'll be interesting to see how the market handles that. But yeah, I think a recession's almost baked in for over the next year.
Okay, guys,
it's not like a normal recession though. It's a really weird, like a Chinese.
Yeah, it's almost like a productive recession where it's like, interest rates might be changing, and we still have people flush with cash and positions, and the stock market might still be inflated, but it's enough to like price in that a correction is nigh. Is near.
Typically, when we go through a recession, we go from 2.5% growth down to 0.5% growth, and people are like, "Oh man, things are really slowing down." We're going to go from 6% growth to 4% growth and be in a recession. That's crazy, but that's what's going to happen.
Yeah. Another thing as well, I forgot to remind you guys again. If you have not subscribed to the channel, please make sure you do that. Subscribe to the channel. Chris and Tyson and myself, we talk about some great stuff here in this channel. And if you're not a subscriber, you're not going to get to know when we go live, and you need to go ahead and subscribe. So please go ahead and subscribe to the channel, but also smash the like button. That's the way we can get this video out to as many people as possible. That's it from us. We do appreciate you guys being here. We will see you back next week, same place, same time. And we're definitely going to have more conversations about what we spoke about today. Just go ahead and make sure that you post those chats. Go ahead and comment in the chat. With that being said, this is Chris, Tyson, and myself wishing you peace, joy, and successful trading. Until next time, happy trading.